So this is Doug McIntyre. I'm the editor of Climate Crisis 247, and with me is Dave Calloway, who's the other editor of Climate Crisis 247. We're going to talk today about my premise is EV sales in the United States are dead. Tesla might be an exception, but if you look at Ford Motor Company, which desperately wants into this business, they've just deferred $12 billion in investment because things aren't going well. They sold 750,000 Ford F-150 pickups, the number one selling vehicle in the whole country. Of those, they sold 24,000. And they have promoted this thing as much as you possibly can, and they can't get anywhere at all. So I just think this is one of the signs that selling EVs in the United States, for whatever reason, people just don't want them.
Yeah, I think, Doug, I think people don't want them for the reasons that the producers want them to have them, right? They want companies like Ford and Tesla, charge high margins for those EVs. The prices have been too high for a long time, and that's why sales haven't risen. There's worry about range anxiety, right? There's not enough charging stations. I've talked to several people who, have tried to rent cars from Hertz or so and been given a Tesla and looked at it and said, this is really cool, but I wouldn't know where to find a charging station in this town I'm visiting. So give me something with fossil fuels. So I think that's still the major thing that's holding them back. Now, no question that Ford, GM, all the major players last year that jumped into EVs in 22 and 23 overinvested and overestimated the demand. And that demand has not hit. Lower gas prices have really helped. Gas is $3 or something like that. Nationally, $5 here in California. But that said, EVs had an 8% market share last year or in the fourth quarter, according to Cox. They're still, sales are growing. They're just not growing to what estimates were. In China, where the cars are ultra cheap, and they basically force you to have one, or you get taxed, to death. Their BYD is selling cars, but they're not selling here in the U.S. Tesla still owns the market. So I think what we're seeing is a big bear market in EVs. People are not buying them for the right reasons. But if you ever drove a Tesla or rode in a Tesla, you will see that the pickup in those things is game changing. And I think people will ultimately like to try to buy them to experiment with them. Whether that's enough for Ford and GM, I don't know. But it certainly seems like Tesla is fitting into the market right now. It's lowered its prices. It had record sales in the fourth quarter, almost 500,000 EVs. So I think it's premature to say they're dead, but they're certainly in the hospital.
Well, let's look at it another way. You mentioned things that are a problem. The Biden administration just put several million, not billion dollars, into helping build out charging stations in the United States. Now, I'm going to guess that there are about 3,000 charging stations, last I heard. There are 134,000 gas stations in the United States. And it leads me to believe that early adopters are willing to accept the fact that you have to, drive extra miles and stand there while it charges and everything else. But once you get past what in the United States might be 3 million people, they won't put up with it. So does the Biden administration need to say we have to write bigger checks to build out charging stations, or do you have to wait for Tesla to say, yeah, we're going to invest more money than we have in building charging stations, and then do what they have and said, look, Ford and you guys can pay us a little fee and we'll let you use them. Who's going to pay to solve the charging station problem?
I think ultimately the consumer will pay. Biden administration, is probably right not to be throwing billions at this because, like you said, the market is not ready for it. Tesla's charging stations, its charging mechanisms have proven to be, or at least to date, the winning combination. And Ford and GM, all those guys who are going to launch their own networks, have essentially fallen into line to use Tesla stations. So, it looks like Tesla will be the early winner. But until people are ready to adapt, like you said, it's a chicken and egg thing. They're not going to adapt just because there are more charging stations. People buy cars because they're cool. People don't buy Teslas because they're good for the climate or even because they're electric. They buy them because they're cool. They've got great pickup and a big, monitor in the middle of the dashboard and stuff like that. They like that. And the folks that I know that own them deal with the charging issue. In fact, there's a lot of places you can still go, like to your local mall, where the charging is free.
Yeah, no, listen, I get it.
That's not going to last forever, but still, right now, it is attracting early adopters. You and I are not yet those people.
So let's take the federal government. They just did two things that seem to completely be at cross purposes. The first one is, until the end of last year, there were 49 car models on which you could get the $7,500 tax credit. That dropped to 19 at the first of the year. So the incentive you were giving people to do that has virtually disappeared. At the same time, the Biden administration said to the car companies, you need to have an average of 49 miles per gallon across your fleet. So for every 17 mile a gallon, you've got to have one that's like 70. It just seems to me like they're cutting their own throats when you look at those two moves.
I think they are. I think you're right. I think, the EV subsidies essentially are a political victim of the U.S.-China, bad feelings. Nobody's going to sign off on those subsidies if they're going to allow China to import its parts, and that that's just the way it is in Washington. I'm not sure that people make car decisions based on subsidies. Certainly, it helps. But this is a reality for Tesla and Ford and GM and Honda, which introduced a bunch of new EVs just this week at the Las Vegas Consumer Electronics Show. Toyota, which is launching, I think they're going to have to find a way to cut the prices. And to do that, they're going to have to find a way to improve the batteries at lower prices, because that's where all the cost is. That's where the weight is. That's where the tension is. It's going to come down to the batteries. The government did shoot itself in the foot. And by the way, $3 gas, as long as we don't have some sort of escalation in the Middle East, that's going to be a reality in the U.S. this election year, because nobody is going to do anything to threaten the production of oil in an election year, because people vote their gas tank costs. So it could be another troublesome year of growth for EVs, but not strong growth. We'll see. Certainly the fourth quarter showed that people are still buying them.
Let's go over to winners and losers in terms of investors. Right now, Tesla's market cap is number 9 in the United States. It's almost the same as Warren Buffett's Berkshire Hathaway. It is 16 times Ford's. Ford sells more cars than Tesla by a fairly wide margin. So if you're somebody looking at Ford, what's your conclusion when you look? I mean, that delta is massive.
Yeah, it's Tesla is a sexy company with a celebrity founder. They make hot cars. They've always had a premium. I've been wrong on their shares since the beginning. They've gone up when I've been bearish and down when I've been bullish. The Ford is another animal. Tesla's a niche product. It's not a major U.S. automaker. Ford, I bet you if we looked at auto sales, Ford sells 10 to 16 times what Tesla sells. But it's beset by traditional automaker problems, labor problems, investment problems. And it's not, the EVs are not going to save it in that market cap. So, betting on Ford shares just because you think they're going to sell a lot of EVs, probably not a good idea.
So what you've got right now is Tesla has about 50% of the EV market share in the United States. Nobody else has even double digits. Kia's got a decent market share. BMW has a little. GM and Ford are way behind most people. But there's a category of car companies and stocks that are these little tiny startups like Lucid. Now, they still carry heavy market cap to sales ratios. Crazy. So what happens to these guys? I mean, they've gotten no traction, and 2 or 3 of them have lost billions of dollars while building 20,000 cars. What happens to those guys?
Yeah, I like to think of these guys as kind of the first wave of the hype, like we saw at the internet back 25 years ago in '99 when there was, everybody was starting an internet company, and webvan.com, remember those guys, CMG,
Yeah.
and they all fell away and market leaders emerged. Some of those leaders were companies that pre-existed and managed to adopt to the web. So I think Lucid is an interesting one because it's backstopped by the Saudis, I believe. They own 70% of it. So they're not going to let it go. But your other ones, kind of those ones you mentioned, the startups, I mean, Nikola was just a fraud, right?
Right.
The other ones, Fisker, was having big problems. Rivian is one that seems to be interesting. It's hanging in there. Neighbor of mine has a Rivian on my block. I can see it from my window. People like them. It may survive as a niche product. It may also just get bought by Ford or GM or Amazon or something like that. I don't think Tesla has to worry for a while. If you're going to buy an electric vehicle, why not buy one from a proven leader in the market, which continues to invest in them even as you own it. It's going to be a long uphill struggle for the major automakers, but one that it's a market they have to be in because it's a growing market, I think, and they're going to lose out if they don't get in it. One final thing on that, a way to look at it, if you're an automaker, might be more like they're looking at it in Japan, that Honda and Toyota, they're leading with their hybrids, which people are comfortable with, and then kind of moving them towards the EV market.
Now that's a very interesting point. Toyota was beat up on for the last 3 or 4 years because they wouldn't get to the EV spot. They learned from the Prius that EVs for the time being were a niche market. There was a broad acceptance of hybrids. One of the things that Ford had to own up to a few months ago is that they couldn't sell the EV version of the F-150. The F-150 itself got 17 miles a gallon in the theory. So they came out and admitted the F-150 hybrid is a very good seller. I mean, did the big car companies have to build that bridge by taking current models that are well-known models and sort of shifting them to hybrid and then hope it goes to EV?
That it seems like a long way around, but it might be the way to win market share. People, like we said in the beginning, people are nervous about them. Nice to be electric until you don't need it, and then to shift to your gas model. So, I think Honda and Toyota are making sense doing that way, and the other guys should look at that.
To bring this to a conclusion, if you are the Biden administration and you've set this goal, incredibly ambitious goal for what the MPGs should be for the big car companies, right now it looks like you can't get there. How does the government help them get there.
Wow. That's, I've never been a huge advocate of the idea that government can help you do anything, because the rules change so often. But I think it needs to continue to find ways to create incentives for them, maybe beyond consumer incentives, and probably help with production incentives. Right? You're from Michigan. You've come from a long history of the state and local cities working with the auto companies to make things easier for them, and maybe we need more of that, if not at the state level and at the federal level.
Yeah. Well, this is Doug McIntyre, one of the editors at ClimateCrisis247,
and I'm Dave Calloway.
My partner in crime here. Thank you for having us, and we'll see you next time.